Hello everyone and welcome to my morning report analysis videos on Friday 23rd of November with me, Richard, market analyst at Hantec Markets. We've got a degree of volatility, you could argue, through sterling. That sort of continues to be the fact on Brexit, how the markets have responded to the various shenanigans that we continue to see coming through Brexit negotiations, both domestic and within the EU. Prospect that Spain could veto or certainly vote against the signing of the Brexit deal, and also looking at how Theresa May can potentially get it through Parliament or not, depending on the case. Anyway, so we had a big jump on sterling yesterday, sort of settled a bit today, but back lower again as the EU now sort of look towards whether Spain are going to cause some trouble over how Gibraltar is treated in the deal. And we've got a little bit of a selling pressure through sterling, which has rebounded a touch, but I think the volatility through sterling is just going to continue, really. In terms of other markets, you've had a rebound to an extent on equities today, nothing too significant. There was a selling pressure through yesterday that has unwound a touch today, but as you would be able to see on my DAX analysis on the website, I don't really think that this is a sustainable move necessarily. DAX resistance around 11,230, so keep an eye on that. Yeah, I think we're still selling into strength on these equity markets. You've got S&P 500 futures, which are pointing a little bit lower today, nothing too significant, but the Wall Street markets are, again, they're opening, but only for half a day today, and generally you'll tend to see sort of volumes very light. Bond markets are open again, touched lower on the 10-year, or basically flat, really. A little bit higher on the 2-year, but again, very thin traded volumes and very much sort of lacking direction, really. Very slight shade of dollar strength, but nothing really decisive in any way. So, where are we sitting in terms of data points today? Well, we've got or we've had, I should say, the Eurozone manufacturing, flash PMIs, which have all disappointed. Look at that on the composite, down half, less than expected, missing by 0.6 there, which is not all that great, I have to admit. The growth trends in Europe continue to underwhelm, to say the least. Following on from yesterday's ECB minutes, which sort of reflected the fact that it was sort of keeping an eye on growth trends generally around the world, which are a little bit disappointing as well. US aside, that would be. And later this afternoon, we've got the Canadian inflation expected to be 0.1% on the month, 2.2, so staying in line with the year on year. And then the US flash PMIs, which are at 2:45 UK time, which if this ever loads, would show you that it's expected to sort of be buzzing around the data points from previous or last month. It takes me to my chart of the day, which is I've gone for dollar rand today, and that was because we had a rate hike from the Central Bank of South Africa yesterday, and subsequently the rand strengthened, but it has been strengthening pretty consistently actually over the past sort of 2 or 3 months, and you can see actually it's topped out. It's moved below 13.95, which completed a top pattern. If I zoom out, you can see that top pattern pretty well. It's been sort of buzzing around that sort of level, but moving lower on that rate hike, just continues this trend that we've seen of low highs, low lows, completing that breakdown through 13.95, which gives you an implied target of from 1570. So it's around what, 180, 175 pips or so, and you can certainly see, I think, a move back to test that key reaction low, that old key reaction low of 1306. I think in the very least, I think you're likely to see a test of that level. So it looks as though that selling into strength on dollar rand is the way to go. You've got in the last sort of week or so, you've got this trend lower that has formed, where intraday rallies are being sold into. and that interestingly comes around that neckline of the breakdown, around that sort of 14 big figure mark. So you've got a resistance band overhead between 1385, that reaction low on earlier in November, up towards the reaction high 1416, 1417 area. So you've got a nice little band of resistance there to use as a selling opportunity if you get a rally into that. You've sort of seen 1383 today. But as I said, any intraday rebounds into that level, I think is likely to be seen as a selling opportunity. You can see here on the hourly chart, you're negatively configured across the RSI, failing under 60, and the MACD lines as well, underneath neutral, and the stochastics have also rolled over. So old support becomes new resistance as the market continues to trend lower, and rallies are being sold into. So I wish you good luck in your trading today, and I'll speak to you later.